The standard W pattern, often taught as the reliable double bottom in basic technical analysis, is one of the most frequently failed chart formations. Traders worldwide are trapped daily by this recognizable geometric shape simply because they rely on the visual pattern alone. The market has no obligation to respect a simple retest of a previous low if the underlying mechanics of supply and demand have not been addressed. True success in trading requires looking beyond the superficial geometry and understanding the forces moving the price. The common reliance on shape ignores the vital context of market structure and institutional intent. When retail traders see the price bounce off a prior support level for the second time, they often rush into a long position. This entry frequently occurs right before the price either breaks down completely or chops sideways in a frustrating consolidation. The market traps these entries because the fundamental issue, the lingering presence of professional selling, has not been resolved. The distinction between a failing double bottom and a structure that works like magic lies entirely within the methodology of Richard Wyckoff. Wyckoff taught that the shape is meaningless unless it is confirmed by the volume signature, which reveals the actions of the Composite Man. The W pattern is only high probability if it is executed as a specific test within a defined accumulation structure. This framework forces us to look at the market not as a random collection of candles, but as a battlefield between institutional supply and demand. We must deconstruct the two critical volume signatures that differentiate a random double bottom from a high probability Wyckoff test. These signatures are the proof points that confirm whether the large, smart money operators are ready to initiate a significant markup. Ignoring this volume context is equivalent to driving a car blind, simply hoping the road ahead is clear. We are looking for an all-clear signal from the professionals, and that signal is embedded directly in the volume bars. Before we dive into the mechanics of institutional absorption, please take a moment to subscribe to the channel and leave a quick comment. Even just a single word or emoji helps the algorithm recognize that this detailed analytical content matters. This simple action greatly assists in recommending this video to more serious traders like yourself who are looking for an edge. It also shows me that this kind of deep dive analysis is worth the significant effort required to create it. Please remember to return to this channel during challenging times, especially when your trading confidence starts to waver. The first critical step in validating the successful Wyckoff W is understanding the left leg of the structure. This initial low is not a random bounce. It must be created by institutional forces absorbing a massive influx of selling pressure. This first low often corresponds to a selling climax, or a major secondary test, within the early stages of accumulation, marking the end of the previous downtrend. The Composite Man must step in forcefully to stop the decline and establish a clear boundary for the subsequent trading range. The required signature for this left leg is non-negotiable. The first low must print on very high surging volume and simultaneously exhibit a wide price spread. This combination of high volume and wide spread is the definitive proof that the Composite Man, representing smart money, is actively involved. They are absorbing massive amounts of shares being dumped by panicked or exhausted weak-handed sellers. This high-volume absorption is the essential prerequisite for any subsequent successful W formation. If the first low of the W occurs on light or average volume, the structure is invalid from a Wyckoff perspective, regardless of how perfect the visual shape may appear. Low volume at the bottom of a downtrend suggests that supply has merely dried up temporarily, not that it has been institutionally absorbed. The lack of heavy institutional commitment means that the market remains vulnerable to renewed selling pressure. Therefore, the high volume on the left leg is the foundation upon which the entire accumulation structure rests. Following this initial high volume absorption, the market typically produces a strong countermove known as the automatic rally. This rally occurs because the sudden removal of supply, combined with the Composite Man's buying, creates a vacuum that pushes prices higher quickly. The high of this automatic rally and the low of the selling climax define the preliminary boundaries of the accumulation trading range. The market needs these boundaries to confirm where the institutional activity is concentrated. The first low sets the stage by showing that the major supply has been taken off the market by the Composite Man. However, the Composite Man must now confirm that all remaining supply has been cleared before committing to the expensive and visible markup phase. The initial absorption proves the Composite Man is present, but it does not guarantee that no more weak-handed sellers remain waiting for a slight rise to exit their positions. This residual supply is the enemy of the markup phase, as it acts as immediate overhead resistance. If the Composite Man initiates the markup prematurely, they will be forced to buy up these residual shares at higher and higher prices, making the accumulation process inefficient. Therefore, the market must undergo a rigorous testing period to ensure that the path of least resistance is truly upward. This testing process involves deliberately allowing the price to fall back toward the original low. The market must look weak to lure out any remaining sellers. This initial institutional buying, marked by the high volume on the left leg, is a signature that has been observed by market masters for over a century. Richard Wyckoff formalized these observations into a coherent methodology, providing traders with the tools to read the market's internal condition. Understanding this historical context, the battle between public supply and institutional demand, is crucial for applying these concepts today. The same principles that governed the markets in the early 20th century remain profoundly relevant to modern trading. The market mechanics are timeless, driven by human psychology and the sheer size of institutional capital. When large amounts of money move, they leave a distinct footprint on the volume profile, which Wyckoff taught us how to decipher. This footprint is the only reliable signal that a true reversal, rather than a temporary pause, is underway. We must always prioritize the volume and price spread over the visual appearance of the chart pattern itself. The goal of the high volume on the left leg is to create a support base so strong that no one can ignore the institutional commitment. It establishes a line in the sand where the Composite Man demonstrated a willingness to absorb everything offered. Any subsequent movement back toward this line is therefore viewed with extreme suspicion by Wyckoff analysts. We are not just watching the price. We are watching how the market responds when it approaches this critical zone of prior institutional buying. If the high-volume absorption did not occur on the left leg, the entire premise of the Wyckoff W collapses. The subsequent movements would simply represent random market noise without the anchoring presence of smart money commitment. This is precisely why most conventional double bottoms fail. They lack the foundational institutional signature required to sustain a reversal. We must demand proof of institutional presence before proceeding to the crucial second phase. The institutional presence confirms that a trading range is now in effect, shifting the market environment from one of continuous markdown to one of lateral consolidation. This consolidation, or accumulation, is the necessary process for transferring shares from weak hands to strong hands. The high volume on the left leg is the first loud declaration that the strong hands are now ready to buy everything that is sold. This declaration is paramount to the entire structure. The significance of the wide price spread accompanying the high volume cannot be overstated. A wide spread indicates that despite the massive buying volume, the price still moved significantly downward during that period. This suggests a furious battle, where sellers were aggressive, but buyers were equally aggressive in absorbing the supply throughout the entire bar. It is the signature of true exhaustion and absorption occurring simultaneously. If the volume was high but the spread was narrow, it might suggest a struggle, but not necessarily the definitive stopping action required by Wyckoff. The combination ensures that the market is demonstrating extreme selling pressure being met with extreme institutional buying pressure. This initial battle sets the stage for the relatively quiet period of the accumulation trading range. The market must now pause to digest the massive share transfer that just took place. The initial low, therefore, serves as the anchor point for all future analysis within this potential accumulation structure. Any retest of this low, which forms the second leg of our W, must be scrutinized against the backdrop of this initial institutional commitment. The Composite Man is essentially saying, "We bought here before, and we are willing to buy again, but only if we confirm that no one else is left to sell." This confirmation is the core function of the test. The market's job during the subsequent automatic rally and the ensuing secondary test is to confirm the high and low of the range. The Gauss secondary test often occurs on lower volume than the Gauss selling climax, which is an early sign that supply is starting to diminish. However, the true high-stakes test that forms the magical second leg of the W occurs later in Phase B or Phase C, when supply exhaustion must be absolute. If you are interested in the historical context of these massive institutional movements and the figures who shaped Wall Street, I highly recommend checking out our companion channel, Wall Street Memoirs. That channel dives deep into the financial crises, the legendary traders, and the historical events that provide the backdrop for methodologies like Wyckoff's understanding. The history of finance enriches your understanding of modern market cycles and the persistent nature of institutional behavior. You can find the link to Wall Street Memoirs right below this video. Moving into Phase 2 of the W, we encounter the crucial mechanism that differentiates success from failure, the cures de triui. This second low of the W is the defining moment, the high-stakes probe designed to confirm supply exhaustion. The Composite Man knows exactly where the previous institutional buying occurred, the left leg's low, and deliberately allows the market to retrace toward it. This retracement serves two purposes: to trap late shorters and to flush out remaining weak-handed longs. This retest often occurs deep within the accumulation schematic, potentially as a flash-to-spring size followed by a test, or a simple secondary test, E of the low, depending on the specific structure. Regardless of its specific Wyckoff label, its function remains the same. It must demonstrate a lack of selling pressure at the critical support level. The Composite Man is not interested in buying shares that will immediately be sold back to them on a minor rally. They need a clear runway. The critical volume signature of the test is the absolute core of the Wyckoff methodology and what makes this pattern work like magic. This signature is the exact opposite of the volume signature required for the left leg. The price action of the test involves the price approaching or slightly undercutting the low of the first leg, the original high-volume support level. The market must look weak enough to convince the public that the support is about to break. However, as the price descends toward this critical support level, the volume must diminish dramatically and show extreme low readings. This requirement is the single most important piece of information that distinguishes the successful W from the failing one. If the market approaches the low and volume surges, it means supply is still present, and the Composite Man has failed to clear the market. This would result in a failure and likely a new markdown. The interpretation of this low volume on the retest is straightforward and highly logical. Low volume proves that the remaining supply is exhausted. If there were significant shares held by weak hands or short sellers looking to exit, the volume would spike as they panic sold into the decline. The lack of volume means that when the price hits the previous institutional buying zone, no one is left who is willing to sell. The market is effectively light. This low-volume confirmation provides the Composite Man with the highly sought-after all-clear signal. They now know that if they begin to bid prices higher, they will not encounter significant resistance from trapped sellers looking to break even. The path of least resistance has been confirmed as upward, and the risk of a failure during the markup phase is substantially reduced. This is the moment of maximum conviction for the smart money. The contrast between the two legs of the W is vital to appreciate the genius of the Wyckoff approach. The left leg requires high volume to prove institutional entry and absorption. The right leg requires critically low volume to prove supply exhaustion and the absence of opposition. It is this specific opposing volume profile that transforms a simple geometric shape into a powerful forecasting tool. The shape is merely the framework, the volume is the engine. When analyzing the low volume test, traders should look for bars that show a narrow price spread as they approach the low, often with a slight tail or shadow indicating a quick rejection. The narrow spread combined with the minimal volume signifies that the selling pressure was minor, and the institutional buyers who were present could easily absorb the small amount of supply without effort. This lack of effort is the signal of a successful test. If the test occurs on high volume, it means the Composite Man has more work to do, and the accumulation is not yet complete. The structure may evolve into a deeper spring or a prolonged consolidation, but a rapid markup is highly improbable. High volume on the test implies a renewed battle, indicating that institutions are still struggling against persistent supply. The trader must wait for the definitive low-volume confirmation before committing capital. The concept of supply exhaustion is central to understanding why the low-volume test works like magic. Imagine a large ship trying to sail through a narrow channel. If the channel is filled with ice, supply, the ship must expend massive energy to break through, or it might get stuck. The test is the process of using a small tugboat to check if the channel is clear. If the tugboat glides through easily, low volume, the large ship, the markup, can proceed unimpeded. Therefore, the low-volume test is not a sign of weakness, but rather a profound sign of underlying strength and preparation. It confirms the successful completion of the accumulation phase, where the transfer of shares from weak to strong hands is finalized. The Composite Man has systematically removed all the obstacles standing in the way of the price rise. This preparation is meticulous, deliberate, and leaves a clear signature on the volume chart. Traders often mistake a low-volume retest for a lack of interest, believing that low volume means the market is dead. In the context of the Wyckoff accumulation, however, low volume at a critical support level after an initial high-volume absorption is the ultimate sign of intent. It signifies that the market is coiled and ready to move, requiring only a small spark of demand to initiate a significant price move. The lack of supply ensures the move will be swift. The timing of this test often correlates with critical points in the Wyckoff accumulation scheme, typically marking the end of Phase B or the transition into Phase C. These phases are characterized by the market attempting to shake out the final remaining sellers, often through deceptive price action that looks bearish. The low-volume test is the final confirmation that these shakeouts have been successful. The market has been thoroughly scrubbed of supply. Consider the psychological aspect. The Composite Man wants the market to look as weak as possible during the test. They want the public to believe that the previous support is failing, encouraging short entries and discouraging long entries. The price action may dip slightly below the previous low, creating a spring. But the accompanying volume remains critically low, betraying the underlying strength. The lack of volume exposes the move as a manufactured shakeout, not a genuine breakdown. If the test is successful, the immediate aftermath is typically a swift reversal and a strong pushback into the trading range. This immediate upward response is further evidence that the selling pressure was minimal and easily overcome by institutional demand. The market doesn't linger at the low-volume test level. It springs away from it, confirming the readiness for markup. This swiftness is part of the magic that traders seek. The ability to recognize and trust this low-volume signature is what separates the professional Wyckoff trader from the novice relying on generic patterns. The Wyckoff trader understands that the volume is the truthful indicator of institutional participation, while the price action can often be manipulative. We must listen to the volume, which tells us the story of supply and demand without the noise of emotional trading. The volume is the footprint of smart money. The successful test is the final piece of the puzzle, allowing the Composite Man to transition from the accumulation phase to the markup phase with confidence. This transition is marked by a clear increase in demand and a definitive shift in market character. The low-volume test is the signal that the heavy lifting of absorbing supply is complete, and the focus can now shift entirely to driving prices higher. The market is now balanced, but with a bias for upward movement. The failure contrast between the common double bottom and the successful Wyckoff test brings the whole methodology into sharp focus. The common W fails because the retest volume is random or worse, high, indicating lingering supply ready to sell into any nascent rally. When volume is high on the second low, it signals that the Composite Man has encountered resistance, meaning the accumulation process is stalled or failing entirely. The high volume reveals that the market is still heavy. Conversely, the successful Wyckoff W requires the retest volume to be critically low, confirming supply exhaustion and the removal of selling pressure. This low volume is the definitive proof that the Composite Man has successfully engineered a low-risk environment for themselves. They have eliminated the opposition before committing the large capital required for the markup phase. This strategic preparation is what guarantees the pattern's reliability. In a failing double bottom, the subsequent rally is often met with immediate selling pressure from those who bought earlier and are now looking to exit at break-even. This overhead supply stifles the rally, causing the price to stall or roll over, trapping the new buyers who entered on the second low. The volume on the second low was high, meaning those sellers are still present, waiting patiently above the market. They become immediate resistance. In the successful Wyckoff test, the market is light, and the sellers have either been shaken out or have already exited during the high-volume left leg. When the price begins to rally after the low-volume test, it encounters minimal resistance, allowing the price to accelerate quickly and efficiently. This lack of resistance is the mechanism that generates the explosive move that follows a successful accumulation. The path is clear. The low-volume test is not the end of the story. It is the immediate precursor to the TAS, sign of strength. Once the COS, test SWA, is complete and the price begins to reverse, the market should immediately rally with increasing volume and wide price spreads. This rally must break decisively above the midpoint of the W pattern, confirming that demand has taken control and supply has been overcome. The Composite Man is now visibly buying aggressively. This subsequent movement, the sign of strength, validates the low-volume test that preceded it. The low volume proved the absence of supply, and the high-volume rally proves the presence of demand. This sequence, low-volume test followed by high-volume, sign of strength, is the classic textbook confirmation of the start of a markup. It offers the highest probability entry point for the professional trader. High probability entries occur immediately following the successful low-volume test, anticipating the start of the markup phase. Traders often enter either on the first clear bar that reverses out of the low-volume test area or on a subsequent minor pullback to the newly established support. The key is that the entry is based on the volume context, not merely the price reversal we are entering because we know supply is gone. The stop-loss placement is highly logical, positioned just below the low of that successful low-volume test. If the price were to return to that level and break it decisively, it would invalidate the entire premise of supply exhaustion, suggesting the test was a failure. The low-volume test provides a clear, tight, and highly defined risk point, offering an excellent risk-to-reward ratio for the trade. The structure provides clarity on both entry and exit. The Wyckoff methodology transforms the way we look at chart patterns, moving them from subjective guesses to objective analysis based on supply and demand. The W pattern is merely a shell. The true power, the magic, lies entirely in reading the high-volume signature. To confirm the presence and intentions of smart money, we must use volume as our filter, ensuring that we only participate when the institutional foundation is solid. By understanding the necessary high volume on the left leg and the necessary low volume on the right leg, we gain insight into the market's internal condition. We are no longer guessing whether a double bottom will hold. We are observing the precise proof points that confirm institutional preparation for a massive move. This careful attention to volume is the essence of professional trading, allowing us to align our actions with the Composite Man. This strategic approach ensures that we are not entering the market based on hope or simple visual confirmation. Instead, We are entering based on the verifiable evidence that supply has been systematically removed and demand is about to take control. The Wyckoff test provides the highest confidence signal that the market is ready to launch into a strong markup phase. Always remember the volume contrast. High volume absorption followed by low volume confirmation. The power of this analysis comes from the timeless principles laid out by Richard Wyckoff himself. If you wish to deepen your understanding and master the precise methods used to analyze volume and price action, I highly recommend the book, How I Trade and Invest in Stocks and Bonds. This adapted edition of Wyckoff's classic work is essential reading for anyone serious about the markets. It reveals his proven, time-tested methods for identifying the intentions of large market operators and making highly reasoned trading decisions. The book provides the foundational knowledge necessary to apply these concepts across all markets and time frames. It is a masterclass in reading the tape, adapted for the modern trader, and is the ultimate companion to this video. Find the link to How I Trade and Invest in Stocks and Bonds in the description below. The successful Wyckoff W pattern is proof that trading mastery is not about predicting the future, but about reading the present actions of the largest players. We must follow their footsteps, confirmed by the distinct volume profiles they leave behind. The magic is simply the result of meticulous preparation and verified supply exhaustion.